Okay, folks, welcome to our short trade analysis of AMD, Advanced Micro Devices. And what we're going to talk about in this video are the strategies by which we would want to short AMD, and primarily, why do we want to short AMD? This is a pretty strong stock, and I know for you folks out there that are passionate about AMD, probably hating on me right now, but don't. Hear me out. Because I think that ultimately the shares are going to go up higher. I'm going to even give you the reasons as to why I believe it's going to go up higher. But shorter term, we're going to correct here. And it's probably going to be a brief but nasty correction. And I'll walk you through the charts on that as well. So let's talk about the AMD short strategy. Why short AMD? RSI is at 80 or greater. I believe it's at 81 at last look. Trading up and into its third standard deviation Bollinger Band. Let's check the chart. Now, before we get into the chart, folks, this video is going to be brought to you by our friends over at TrendSpider, who provide the trading software. So automate your grunt work, speed up your technical analysis, and improve your accuracy. Reduce costly analytical mistakes by finding chart-winning setups using their scanners, and use their trade alerts to time your trades with precision. Now, take a moment. Head on over using the link below in the video description area and take a tour of the product, and you'll be amazed at what they have to offer for the price of the software. You're trading with institutional software. Start your 7-day free trial offer. Watch the demo tour. I believe in it so much. In fact, I have partnered with them. That's me down here on the website, the Contrarian Trader, and I give the software away free to those who are members of our silver and gold level membership. So take advantage of it, 35% discount code below, cheapest price on the web. Back to the chart of AMD using TrendSpider. All right, so normally when I analyze a stock, I begin with a monthly chart and work downward. In the case of an extreme overbought stock, which AMD is, we're going to begin with a daily chart and work our way back. Now, the shares have had a great 4-day run. RSI at current is at about 81. We've had really outstanding volume. That implies that we have institutional accumulation. Now, while RSI continues to press on to new higher highs, we're reaching levels where it becomes unsustainable, especially when measured against the third standard deviation Bollinger Band in green and the 2 standard deviation Bollinger Band in black. That being said, we can continue higher. Strong stocks tend to get stronger. Weak stocks tend to get weaker. We never want to lose sight of that. Before we enter this trade, we want to see whether or not we have historical resistance on AMD. And we do not. And in fact, AMD has broken out of a rock-solid consolidation, an orderly pullback. We broke out back in June. Continuation breakout in July. Now continuation breakout in August already. Weekly chart. Obviously, new weekly highs if we have new monthly highs. But again, we are trading above the 2 standard deviation Bollinger Band, near the 3 standard deviation Bollinger Band. Can this continue? The answer is yes, it can continue. However, it's unsustainable. That's the basis of our short trade. We know that the probabilities of this continuing much longer are improbable. But there are considerations technically and historically that we need to take into consideration before we enter the trade and choose the appropriate trading strategy. We'll go to that in a moment. Now, what we also want to do before we enter the trade of an individual stock is take a look at the parent index. Is it trading along with that parent index? Is it outperforming, underperforming? Is the probability of, in this case, the SMH, continuing up higher, strong or weak? Well, I got to tell you, this is a pretty good looking chart. Weekly time frame, SMH. We are flirting with a breakout on a weekly time frame. We broke to a new weekly high, and volume already on the week, this is only one trading day, is poised to easily surpass that of last week, assuming that we close the week up higher. Back to the chart of AMD, daily time frame. Now, how do we take advantage of AMD's extreme overbought condition and profit from the downside of this stock? Let's head over to the whiteboard. All right, so we have multiple strategies that we could use to get short of AMD. I'm going to go over all 5 of them, but some of them have more serious downsides than others. All are risky. Strategy number one is simply to short the common stock. This is good for a small account. Anyone can do this, but I'm going to say no right off the bat. And I'm going to go over the reasons why in a moment. I'm going to skip down here to buying puts. Also good for a small account. But I'm also going to say no to this. A credit spread. That is where you sell a deep out of the money put option to help finance the purchase of an in the money put option. This is an attractive strategy. But again, I'm going to say no to this. Let's go to the reasons why I'm saying no to these three strategies. Back to the daily chart of AMD. Let's face it. This stock is in a strong uptrend. Again, strong stocks tend to get stronger. And one observation I noted earlier when I was using the automated trend lines with TrendSpider is that the automated trend lines, while we are at all-time highs on AMD, picked up, click of a button, that we had broken out above two resistance levels. But this resistance level here now becomes support. So what if we pulled back and we held this support level, or this support level, which we did yesterday, held it on the retest, it holds, and then the shares shoot up higher. Well, our RSI is still going to be overbought, but that third standard deviation Bollinger Band overbought condition is going to be resolved, allowing the shares to move up higher with an RSI that could easily flirt with the high 80s, if not a 90 handle. Also with AMD, look at the weekly chart. New all-time highs. We do not have sellers of like mind, meaning institutional sellers willing to sell at a historical resistance level above, because it doesn't exist. So we take that off the table. Add to this that we have a strong semiconductor index, SMH, as a whole, which is now broken out with no overhead supply as well. So with these as knowns, what we want to do is say, okay, let's look at other strategies by which that we could take advantage of this daily overbought condition. And again, folks, this is not a bet that AMD is going to crash whatsoever. We believe there will be a correction. On that correction, we will exit the trade. Now, back to the whiteboard, our concerns leave us with two options. Pardon the pun. Option number one, selling naked calls. Not my favorite. Why? It's because it's a directional play with no hedge. Now, what might make this strategy a bit more attractive is if we gap up today to around RSI 85, and I can go further out in the strike price, say around to the 130 strike price on AMD going out around 45 days. My favorite strategy here is the short strangle. This provides me with a hedge. Let's take a look at the options calculator. First, we're going to take a look at the implied volatility, historical and current. You could see that the options, when these are in green, they're rising in value. And this is another reason why I don't want to buy the options, because the options relative to last month are more expensive. They're increasing in price. This is what makes selling the options all the more attractive, because that deposits money into our bank account right away. Now, the model we're going to use for the strangle of AMD is this. And what a strangle is, for those who are not familiar, is the simultaneous sale of a deep out of the money. I use deep out of the money, call options and a put option. Same number of contracts, same expiration date. In this case, I like to go out roughly 45 days. We're not going to hold it that long. It might be only a week until we get our correction. On that correction, we scalp our profit. We move to the sidelines. We shoot for a 50% profit target. Sometimes more, sometimes less, but that's our goal. So you can see I've inputted the call side 125 strike subject to change, because if we gap up today, I'm going to want to widen out these strike prices. And to the put side, we'll be using a 90 strike put option, and that's a sale, not the purchase. We'll be selling the 125 call option. We will be selling the 90 put option, leaving us with a probability of profit of 75.27%. Now, what we want to also do before we enter this trade, because this looks all pretty, it looks like, wow, how can you not make money on this trade using the probability calculator? Well, you need to worry about binary events, as I note here. What's a binary event? Well, it could be easily as earnings. Earnings could send the shares up skyrocketing through our resistance level, our call side level at 125. So we need to know, has AMD already reported earnings, or is this going to act as a headwind for us in the near future, causing us to potentially lose our shirt, either to the upside or to the downside? I already know the answer. AMD has already reported earnings. They did so about a week ago. So that binary event is not a concern. And you can see in the pre-market, the shares are under a little bit of pressure. They're trading with the inside of a triangle formation. I'm hoping for one last push up higher. That doesn't mean that we won't get 2 or 3. But the goal here is that by using a strangle, it allows us to be wrong for a few days. Because as the shares, if they continue up higher, yes, the call side is going to increase in value. The however is our hedge down at the 90 strike decreases in value, offsetting most, if not all, of the loss to the call option. And when we get up around to the 50% profit zone on the put side, we can roll up, especially if we could roll up to $100 strike, especially if the 125 call side gets tested, meaning the shares of AMD are at or are above the 125 strike price. Let's talk about what we would get paid here. Let's go back to the 90 input on the put side. Here's what we would get paid. And here's where we get those numbers from, by the way. The put side here, going out to September the 17th, 45 days, 90 strike. The midpoint is at 92 cents per contract. The call side, 125. The bid, 175. The ask at 182. I always use the midpoint at 178. This is all subject to change when the market opens. And what would get deposited in our account if we sold only one contract is $2.70 per share. There are 100 shares within the contract, so we take 270 times 100, and we get $270 deposited into our account. And our goal is to collect a 50% profit on this trade. Members, I'm going to drop this model into the Slack forum, and there it is. Members, so go check it out. And what I do here, folks, is we deposit the ultimate model and the trade execution into the Slack forum for members only when we execute the trade and when we exit the trade. So, folks, I hope you got some value out of this video, and I would encourage you to please hit that like button, share with a friend, leave a comment below if I can answer any of your questions, whether you're a member or not a member, because I really appreciate you watching this far. Don't forget, take advantage of our 35% discount code to TrendSpider. We also give this away free to members of the Contrarian Trade, silver and gold level members. There's a link to TrendSpider below in the video description area, 35% off. Everybody have a profitable trading day, and members, I will talk to you later on. Be well.